Morning, everyone. Thank you, Jeff, for that intro. Um, First, I just want to, thank everybody for joining us. We actually have, let me go back a little. COG, or Community Association Resource Group, is really a resource group that we formed probably a good 8 years ago or so. And the main intent is really for education. So on a monthly basis, we go ahead and we present some type of discussion that's beneficial and educational for property managers and board members. Um, we also invite anyone that would like us to talk about a specific topic to let us know, and you can reach us through COG, forhelp.org. That's CARG, the number four, and then help, HELP.org. Just very briefly, some of the vetted members that we have in the COG group is Charles, who's the founder of the Community Association Resource Group with GRC Landscaping. Right now we have Andrew from Mallory Elevator. We have Craig from Professional Builders, which does maintenance and janitorial. And we have Darren with Pest Control, Forever Gone, and also he's a consultant that does consulting for associations and property managers for landscaping, pest control, tree trimming, and so on. We have also a new member, Austin from Talbot Painting. Let's see, who else do we have here? And then there's myself, I'm Mark Buckhalter with Accounsult. And we've been doing condominium monthly accounting for the last 24 years. Today's topic, which is probably one of the most important topics that we probably have given out. It's a it will be a new product, and it's really insurance for bad debt or delinquencies of condominiums. So just like for argument's sake, you have insurance to go to a doctor, or for if you have an individual home, or for your condominium, or for your car. This is a brand new product that's been in the makings and development for a good number of years, and I'll let Lee explain that, shortly, but it's totally unique. So, everybody that signed in today this is the first time you're going to be hearing about this. It's probably going to be the most exciting product for associations that will really almost revolutionize condominium life. With that said, I'm going to turn this over to Lee. Jeff mentioned if you have any questions, please go ahead and use the Q&A, and we'll be answering all of that. After we finish with Lee's presentation, we'll also open it up to any of the COG members right now that are online that you need to get some advice, questions, or information. So with that said, I'm going to turn this over to Lee. Lee Katzman has been around, even though he doesn't look it. He's an old timer. He's been around forever. I think I met him probably close to 30 years ago. Um, he is an attorney that does specializes in condominiums and HOAs, and he's the founder right now of a company called Budget Bliss, and he'll explain that going in a little further. But today's intention really is to just introduce you to the problems and the nuances of bad debt and delinquencies for associations, and what the future is going to hold to help the associations out to go ahead and to fix and cure this problem that is probably the when I do budgets, okay, and I don't want to keep on going on and on, but this topic basically comes up every single time and is probably the one of the most important features of an association budget. So with that said, I'm going to turn that over to Lee, and I'll be interrupting every once in a while, asking questions and going back and forth. So Lee, take it away.
Thanks so much, Mark. I think I might turn it back over to you a little bit because you're doing a really good job on explaining things. But thanks so much, everyone. It's a pleasure to be here. I want to thank Mark for having us and CARG, the Community Association Resource Group. I'm a little hoarse today, been talking too much, but I'm sure you'll be able to understand me. I've been thinking about this class and how to teach it for some time now. I've been doing this a long time with associations. I've been teaching a lot with associations for 3 decades plus. And I try to have a class that's interesting, that's going to hold everybody's attention. It's on a good topic. Today's topic is revolutionary, as Mark says. And what I'm talking about today is budget insurance. Okay. It's something that doesn't exist right now. Budget insurance does not exist right now. Budget insurance is something that everyone who's ever worked with or worked in or worked for a community association wished was available because it makes the system functional in a way it was supposed to be from the beginning, but never was. Okay. And we were trying to think about a good eye-catching title for this class as well. And we thought Say Goodbye to Bad Debt would be illustrative and get everybody's curiosity. And I'm thinking about that. You know, I want to do a little bit of a background on bad debt and what bad debt actually is, because I think it's really important that everybody in the class understands what bad debt is. Okay. So everybody understands, as being involved with associations, that associations operate on an annual budget. And that annual budget is supposed to be an estimate of the anticipated expenses of the association, every single one of them. And what you're supposed to do is figure out all the things you have to pay for and you've obligated yourself to pay for, and get a number on that. And then don't add to it and don't take away from it, because that's the number you need. So let's just say we need $1 million, right? I have an association and the association budget needs to be $1 million. I need $1 million to operate my community, to do all the things I want to do, pay my vendors. I need to do the lawns and the landscaping and all the vendors that are on top of that are on CARG. They have to get paid for the work they do for associations. And we calculate all that as board members and as management companies, and we figure out, okay, we need $1 million. So what's the next thing you do? Well, the next thing you do is you figure out how many owners do I have. So let's say I have 100 owners. So I need $1 million, I have 100 owners. That means that each owner pays $10,000 a year annually. That's the burden, right? So I have 100 owners that are each paying $10,000 a year to get me to my $1 million, right? And what I want you to think about is think about each owner as like a little pin or stick. And pretend that your building, whatever that building is standing on those 100 sticks. The 100 sticks is what holds the entire building up, like a foundation, right? Because the people in your association are the financial foundation of your ability to collect that $1 million, right? And the one thing that boards never know is they never know if everyone or some aren't, or a lot aren't. They don't know who's going to pay and who's not going to pay. Every year you go into an association and you say to yourself, what do we think our bad debt will be? Meaning, what do we believe? If we need $1 million, then what do we believe we're not going to collect from our owners and we'll be short? What do we believe our deficiency will be? Okay. So that is what bad debt is. It's a deficiency in your operating budget that does not allow you to have the full capital you require in order to conduct all of your business that you've anticipated. Okay. So what typically happens is that I can ask Mark a question, but I would say to Mark, like, Mark, if I have $1 million budget and I have 100 owners, each paying $10,000 a year, and then I anticipate 5% of my owners not paying timely, I present at 5%. So what would I would have to change my budget, right? If I collected only $1 million, then I would only have 950,000. But if I collect $1 million plus 50,000 in bad debt. Hold on one second. I'm sorry. Excuse me a second. Hold on. Mute me for 1 second.
Yeah, so I guess really what Lee is talking about is that when a shortfall occurs in your budget, it's because of two things. Either you go ahead and you spend more money than you should on a particular line item, or you don't have enough monies that are coming in from the unit owners. And that creates a lot of dissension because I, as a unit owner now, and I've been paying, now I have to pay mine plus a percentage of the people that are not paying. And that's really what goes ahead and causes the dissension and the aggravation and the turmoil, and potentially will lead to the dirty word of special assessment. I see Lee is back.
Sorry,
So,
it's fine. I have my son here today, and it's a little difficult with him in the room. But here's the situation. So, like Mark said, so that budget, if you cut the $1 million, then you're going to be short. And what happens when we're short? When we're short, we can't meet all of our obligations, and something gives, something that we don't want. Either money gives, client and vendor doesn't get paid, or we don't make a repair we have to make, or we need the money, so we take it from an account we're not supposed to take it from, right? Reserve accounts, which I know people have done before. All these bad things happen. All the bad things that happen in an association typically are a result of inadequate budget capital. Okay. Because when you have all the money, when you estimate the budget, you have all the money to do what you want to do, and you can do everything you want to do, irrespective of whether people are paying their bills or not. That gives the company financial freedom. Corporations, for-profit corporations in the United States are the average for-profit corporation in the United States is between $50,000 and $75,000 generates a year. Okay. Most community associations are larger than the average for-profit corporation, even though they're not-for-profit corporations. Being a not-for-profit corporation doesn't make a difference. It just means that they're not in the business of making money. It doesn't mean if you're running $1 million, $2 million, $3 million association with that kind of budget, you are running a big business. And if you don't think that you need adequate capital to run that business properly, then you're making huge mistakes. Everybody needs capital to run a business. That's the way it works. Okay, so the idea of budget insurance and bad debt is about this. It's about an association having the financial freedom to buy an insurance policy that basically says to the association, it doesn't matter how many people in your association don't pay. 5%, 10%, 20%, 30%, 40%. Okay, it doesn't make a difference how many of your members don't pay. Because if they don't pay, the insurance company does pay to your association. So if you're expecting a 5% delinquency in your association, and you would normally have to raise your budget to $1,050,000, right? To cover that million, right, Mark?
yep, absolutely. You have to gross it up.
Now, I'll tell you a lot of things that happen right now. I'll tell you a lot of things that happen. Number one, most associations don't properly record their bad debt needs in their budget. I can ask Mark. I say, Mark, if you have 100 associations, how many of them properly plan for bad debt in their budget? Mark's going to tell me less than 25%. Right, Mark?
Well,
Mark,
that's
they're not for you. In your firm, maybe not.
that's how it is industry standard. Okay, with my clients, I actually twist their arm to make sure that they go ahead and they put in a bad debt line
That's
item.
right.
Because
And they don't want to do it.
otherwise you're setting yourself up for failure.
That's right. And then it makes their job harder as board members also. I mean, board members are volunteers, right? We don't want board members to be worried about the money they need to operate the association. They're already volunteering to do the work. I was equating it to people saying to somebody, if I said to you, hey, Mark, we really love you. We want to have you to come out, and we want you on the American Heart Association Broward chapter to be on the board with us. Would you accept that, Mark? And you say, that'd be an honor. I'd love to do that, right? And then when you get there, they say to you, well, Mark, by the way, I just forgot to tell you this. You're going to also have to be responsible for making sure that all the money we're collecting to do this great work we do, you're going to have to enforce that and collect all that money and make sure it comes in.
Yeah. And this
Now,
is
you
what
want you still want the job, Mark?
yeah, and this is what happens in every single board because now you have a neighbor going after another neighbor.
Right. And as board members, do board members really want to be involved in delinquent account collection and worrying about pursuing their neighbors? And they see Mr. Jones who walks their dog with with one of the board members, and they walk by each other and everything's wonderful until one day Mr. Jones becomes delinquent, and now the board is putting pressure on Mr. Jones to resolve his account. And now the friends aren't friends anymore in the neighborhood. It creates problems, right? So the idea of bad debt is, how do you get rid of bad debt? Everybody wants the same thing. Every board member, and I've been practicing 30 plus years, and every board member said to me, you know, when we don't get paid maintenance, what happens, right? So here's the real problem, right? The real problem is that the entire community association, homeowner association, co-op association foundation, how it was built, is built on a faulty foundation. Because the foundation of how the entire system operates is built on the foundation and general rule that, number one, this model works so long as every owner pays all the amounts they owe on time, all the time. That's when the system works. Okay. Now, as real life people living in this industry for this many decades, we all understand that that is exactly not how it works. That it's hardly ever that everybody pays everything they owe at the same time. And what happens because of that is that the system doesn't work. Once you don't have enough money to operate your community, you are at a deficit and a detriment. And I dare say you're even exposing yourself to breach of fiduciary obligation. What the craziest thing is I think about is like insurance, right? I'll give you a perfect example. Property and casualty insurance for condominium associations, right? You have to have it, right? It's a mandated insurance. You have to cover it. It's got to be covered 100%. It's probably one of the largest budget items in the budget. One of the most expensive things we buy, hundreds of thousands of dollars a year for condominium associations, right? And your budget is including that amount. And you sign off as board members and an association to buy that insurance and pay over installments of the insurance, right? What happens if people don't pay you the money that you need to pay for that policy? What happens? You actually won't have the money to pay for the policy. The policy will actually lapse. And that will put your owners, association, and board into a terrible situation if there's, God forbid, a storm or a casualty, right? You would think that that never happens, right? It does happen. It happens. It happens. It just happens. And it doesn't happen maybe to your associations, but I've seen it happen to many associations where they go without insurance. Or I've seen associations borrow money from reserve funds. Mark can tell you about that over the last 24 years he's practiced, how many times he's taken over clients we've seen that they dipped into reserve funds they weren't allowed to because they were protected. But what they say to the board members is, what are we supposed to do? We didn't have a choice. We have no money. We can't pay this person we promised to pay. We can't fix this roof that we promised to fix, right? And we all know that board members, the last thing a board member wants to do is raise maintenance. That's the last thing any board member wants to do. No one wants the maintenance to be higher. So all these factors have driven towards a solution. What's the solution? The solution is, how do we keep cash flow in associations? All right. So budget insurance does just that. Budget insurance keeps the association fully funded with its budget needs and expectations, irrespective of owner payment or non-payment. Because when owners don't pay and deficits are created in the budget, but budget insurance fills those deficits. Okay? I'm going to ask if anybody has any questions so far after all my rambling.
Well, but Lee, it's also a situation, even relating it even to health insurance. If you don't have the health insurance, then you don't go to the doctor normally because what happens is you got to take it out from another pocket of yours.
Yes.
With the insurance for bad debt that you're talking about, that alleviates all the board members' aggravation to figure out, how do I pay for my insurance policy? How do I pay for the FP&L bill? How do I pay for the janitors? On and on and on.
Right.
With basically one phone call or a form that gets filled out, the association is going to be funded by the people that are not paying their maintenance, so they can continue on.
Yeah, I'm going to show you some visual aids to help with the idea of this, to keep it going with an idea. So the first visual aid I'm going to show you is going to be, I'm not sure which one it's called. It's that one, yes. Right. So this one is This one, can you see that? It says if you're associated, expect to have a
Yep.
delinquency of 5. Okay. So what I want to talk about is this, and I don't know if you can see that. Pull it over a little bit more. Yeah, what I want to talk about this is the example I was referring to, right? So I can let you know that right now throughout the United States, the average rate of delinquency in community associations is about 8% right now today. Okay, so we're using a lower figure of 5%. What I want to tell you also about this budget insurance idea or product that you may find is available soon, is that it has two sides to it, like a coin. I always say that some people are going to want it and some people are going to need it, or both. Okay. So who wants this? Well, anybody who believes that they don't want to, any board member who doesn't want to be involved in the delinquent account collection process anymore, who doesn't want to be exposed to legal fees and costs to collect those delinquent accounts, and who wants to just have the money in their bank and not have to deal with that ever again, is going to want budget insurance. It's also going to help streamline their operations with their management companies internally, with their volunteer time. In good years, board members and managers don't spend too much time dealing with delinquent accounts. In bad years, board members and management spend, I don't want to say the majority, but a great deal of their time dealing with delinquent accounts and trying to find money where money isn't coming in. Because when money doesn't come in, and typically you have to spend more money to get the money that's missing already, which gives you a larger hole to dig out of. So I want to talk about what the uninsured situation is today and what it would look like with budget insurance. Okay, so like we said, if we have a 100-unit association with a budget of $1 million annually, right on top, each owner is paying about $10,000. Each owner is paying $10,000 a year. So the average delinquency rate in Florida is about 5%. I think it's 8 now. We'll say it's 5. We'll use 5 as a number. Okay. So let's go down the uninsured side into the insured side. So the first thing is, in the uninsured side, the new budget amount is $1,050,000, like we discussed with Mark. We'd have to add the $50,000 of anticipated bad debt to the $1 million, which gives us $1,050,000 new budget. Okay. Well, what does that mean to each owner? Well, 5% of each budget, $50,000 bad debt estimate. Each owner pays $500 more annually. So instead of paying $10,000, now each owner has to pay $10,500. Okay. And what is the $500 payment for? The $500 payment is really for absolutely nothing. It's for an estimated bad debt. Okay. Now, could the bad debt be less than that? Yes. Could the bad debt be more than that? Yes. It's just an estimate, right? So we're saying to every owner, hey, we need $1 million, but now we're going to already penalize you with no benefit and make you pay $500 more that year because we're worried that others aren't going to pay. Now that puts extra weight on everybody, paying and non-paying, okay? Now, let's go to the right side, insured. Now look at that new budget amount. I have it $1,025,000. Now, I would anticipate that budget insurance with someone that has like a 5% or less delinquency and is a good association, is well situated, financially sound, and in good position, I would think that their premium for the budget insurance would be half or half plus a little bit more than the estimated bad debt line. Okay? So for argument's sake, let's just use half right now. Now, obviously, the premium for this insurance policy would have to be less than the estimated bad debt in order for a board to say, yeah, well, we're going to be out this money, we're going to be spending more money, we want to have operational ease. So yeah, I can understand if it's 25,000 or 30,000, even 40,000 for the policy. I probably want to buy that because this is what happens when you buy that policy, right? So let's say it's $1 million, let's say it's 25,000 for the premium. Now, instead of each owner paying 50,000, instead of having a 50,000 deficit, now we don't have to pay because there's no more bad debt line item. It's gone. Now we have to pay for the policy. So we take out the $50,000 bad debt line item and we put in the $25,000 premium policy charge, which saves the association $25,000 and saves each owner $250 annually, right there. Okay. Now, that's obviously a great situation, right? We're saving money, right? But what do you get for that savings of money? What is that $250 buying you? Well, it's buying you some unbelievably amazing things. First of all, when you go to the down below, it says 100% collection of $1,025,000 budget guaranteed. Is that guaranteed with budget insurance? Yes. Like I said, if your owners don't pay, it doesn't matter. So now, once you buy this insurance policy from an A-rated insurance carrier, most likely, you are going to be guaranteed that when owners don't pay, you are going to be paid the money that is deficient in your budget. Okay, so it's guaranteed. On the left side, uninsured, when they pay each owner $500 more annually, is the 100% collection of $1,050,000 budget guaranteed? The answer is no. We already know 50,000 is not going to be collected pretty much. We could be less, it could be more, but we don't know, right? Okay, let's go down even more. Is 100% elimination of all collection attorneys fee and cost exposure and expense eliminated if you don't have budget insurance? No. You're going to have attorney's fee, cost, and expense and collection. You're going to have exposure. You're going to have litigation. You're going to have all those things that go on with trying to collect delinquencies from owners. Okay. With budget insurance, is 100% elimination of collection attorney's fee and cost exposure expense to the association eliminated? Yes. You don't have to worry about that anymore. Those expenses and exposures are gone. Back to the left side. Is 100% elimination of the bad debt line item exposure expense guaranteed without budget insurance? No. It will always be there. As long as you don't have budget insurance, you're going to always have a bad debt line item. Unless you have no delinquency and you're going to reserve 0%. With budget insurance, you will not ever have to have a bad debt line item again because you're going to be guaranteed to collect your full budget annually no matter what happens on the ground with your owners. Okay? Back to the left side. Reduced management board member work time. Is that going to be guaranteed to happen if you don't have budget insurance? No. It's going to increase your management and board member work time if your delinquencies go up. Could be less, could be more, but your time and work is directly related to the delinquency amount. Is reduced management board member work time guaranteed if you buy budget insurance? Yes, because you don't have to deal with it anymore. It's gone. Individual owner financial ability exposure liability capped. Here's the big one. You ready? Florida's a joint and several liability state. Like Mark said, when owners don't pay and the budget becomes delinquent, let's say 10% it goes down to when you're $100,000 delinquent. Guess what? Special assessment. Who pays for it? The owners who pay again. And the owners who don't pay again. So now, if let's say the budget is not 5% delinquent, composed of 10% delinquent, you already paid $500 more. Now you're going to pay another $500 more. Right? Or that would mean that you paid an extra $1,000 on top of the $10,000. Or you could have gone to the right side and paid an extra $250 and never been exposed to ever again paying for your neighbor's debts or the attorney's fees to collect their debts. Because once you have budget insurance, you as an owner, paying and non-paying, will no longer be exposed to the debts of your neighbors or the expense to collect those debts. Once you have budget insurance, your exposure, personal exposure to fund deficient budgets that are caused by delinquent neighbors disappears. It is now taken over by the insurance company. Now, the great thing about this is I want to go back even, increased borrowing ability. Obviously, your credit's not going to get better when you have delinquencies and all that stuff. And if you have budget insurance, you almost have a guarantor, or you do have a guarantor of the collection of your accounts. It's like somebody signing on a lease for you. If you default, they pay. You now have a company, an A-rated insurance carrier that's well financially backed, that says that if these people don't pay this client of mine, I'm going to pay them. That gives you immense power on borrowing ability. It reduces the rates that associations will pay to banks to borrow money. If you need to borrow $6 million to do a roofing project or concrete restoration work, and you go to the bank and say, hey, I want to borrow $6 million. And the bank says, well, we don't know so much about your owners, blah, blah, blah. Well, guess what? We don't have to worry about that anymore because we have budget insurance. And the bank's going to be, what do you mean you have budget insurance? And you're going to say, well, if our owners don't pay, we get paid anyway by the insurance company. And the bank's going to say, that's fantastic. So we don't really have any risk loaning you any money, do we? And they're going to give you a better rate. And that's going to save you, I would dare say, potentially on the size of the loan, more money than the expense of the budget insurance itself.
Lee, I have to tell you, when we go ahead and we do a loan for a client,
Yeah.
the first question, the very first question that the banks ask is, what's your delinquency? And once you start getting into a 5%, the rates go up, or they may not even go ahead and want to give you the loan.
You know what's funny about that, Mark? You know, in Florida, it's a great topic to talk about. This is a different class we can talk about and do if you want to do a follow-up class, select class. But um, in Florida, banks, conventional lenders provide loans to associations. Okay, they have caps on who they can loan, how much they can loan, and what percentage of delinquency they give a loan to. Okay, I'm going to tell you that all the banks in the whole country are loaning money to associations that don't really need it. And the ones that they don't loan money to or won't loan money to are the ones that desperately need it.
Absolutely.
And this insurance is a game changer because this insurance is going to make associations that were previously potentially unable to acquire conventional loans possibly able to acquire them through this kind of financial backing with the understanding of the banks understanding where their position is. And that's going to change everything for associations that are in the A minus, B plus, B minus, C plus range, where they need to have money and construction improvements to bring their communities up, but have been held down because there's no ability to obtain the financial resources because their owners can't pay it and the banks won't give it to them. And that's a situation where we can step in. Even if an association, let's say budget insurance can help an association that has a 15% delinquency, even a 20% delinquency, right? Let's take an association with a 20% delinquency. Now, that's almost unheard of, right? Let's think about an association, Mark. What's your highest association delinquency you have in your portfolio of clients? Give me a number, average. What's the most
You know
delinquent?
what? They range basically between, I would say, 5 and 15%.
Okay,
But we do have people, we have associations that are at 20% or 25%.
okay. Let's take 20% as a number, right? How much would the budget be in the 20% number? How much is the budget about?
Well, let's still go on the
Let's say it's
million
a
dollar
million dollars.
budget.
Let's say it's $1 million budget, 100 owners have
So
20%.
so you got $200,000 there.
Now I'm going to put the budget up to 1,200,000. Same rules as I just showed you on the sheet that I have. You can take that down now. Same rules as on this sheet, right? Million now it goes to 1,200,000. All that is an estimate, doesn't give you any benefits, right? And again, at that kind of 20% delinquency rate, you're probably looking at an insurance premium that's going to be more between a 13 to 18% premium rate, right? So instead of paying 200,000, instead of putting $200,000, making the budget 1,200,000, you make the budget, let's say 1,150,000, right? That sounds like an insane amount of money to pay for an insurance premium, right? Insane, $150,000, right? But you know what? It makes complete sense. Mathematically, legally, business wise, it makes complete sense. If I'm expecting to be out 200 grand, why would, and I'm going to charge my each owner an extra $2,000 on top of the 10,000, and I have a chance to pay less than that to basically remove bad debt, guarantee a funded budget that has cash flow, and be able to operate my association the way I'm supposed to forever going forward. And what happens typically is once you buy this insurance, the owners are still going to have to pay what they owe, but that's not going to be the problem of the association. Board, the way that budget insurance is intended to work is that it doesn't disrupt the present model. So if an association presently works with management or they work with you, Mark, we're going to have the association keeps working with you when they're doing the budget and then they buy budget insurance. They say, oh, our books are kept by Mark at a console. Okay. Well, the budget insurance company would want to keep working with you and have you keep doing that. Same way you always have, right? And then the only difference is that when you would tell an association, hey, board member Steve or Joan, we have some delinquent accounts here that are past, 60 days due, right? And I've sent my demand letter out or whatever else to tell them they have to pay it, the statutory lawyer demand letter. We need to put these accounts in collection and send them over to the lawyer. Well, you're going to do that still. And you're going to still use the same lawyer that they want to use and you use. I don't care. You know, the budget insurance company doesn't care who you use because all they're doing is when instead of that's all still going to happen. So the management company is still going to do their job and the bookkeepers are going to still do their job and the lawyers are going to still do their job. The only difference is that now there's one difference is that the insurance company is going to pay the association for the deficient budget every time it becomes deficient.
And
So when,
and Lee, if I can just interrupt, the
yeah,
most important thing for any business and association is cash flow.
yes, no business
And
can
and
operate.
and you know it, and you're frustrated when you used to go after delinquent accounts. Unfortunately, that can be 3 months, 6 months, a year. If people want to play games with bankruptcies, it can go on
Well, I'll tell you this
on and
also.
on and on.
It's a very amazing thing that has to change also is that, you know, doing this for so long and handling tens and tens of thousands of accounts, right, from start to finish with owners and working for thousands of different associations and working with tens of thousands of board members and managers and management companies. What you have to understand is that, you know, nobody ever makes commitment or very few people make commitments not intending to live by them. Everybody that gets married thinks they're going to be married forever and has high hopes for that marriage. Anybody who starts a business sees their business successful and flourishing. Nobody expects to fail. And the thing is this, when people don't pay their maintenance, it's not that they don't want to 95% of the time. It's that they can't. And there's a problem. And that problem is called life. And we all have it. We have illness, we have family needs, we have job loss, we have things in the economy that make things very complicated and expensive and how we operate our own lives, right? So what we try to do is we're also trying through budget insurance to benefit everybody. And I would tell you that a good budget insurance would also create a mechanism where neighbors, where board members and owners, neighbors in community associations that fall upon financial difficulty are aided through a system that helps them work out their financial debt to the association in a friendly, professional, respectful way. And truthfully, most, if not all law firms do that. And most, if not all people, but there are things out there that don't happen the right way and things out there that are done sometimes wrong or improperly, and it creates chaos. And there's so much noise going on in associations other than board members volunteering their time and being able to do their job. There's so many things. And most of the difficulties of every association or every business, I should say, is when you don't have the proper means to effectuate your goals. I don't have the money I need to fulfill all my obligations as a board member to my community, right? When money's not there, everything goes sideways. And this finally is something that becoming a reality of having budget insurance potentially hit the market and it be available to associations is an absolute game changer in my mind. I've been doing this for, like I said, 3 decades plus in Florida. And, you know, everyone that I've talked about with this potential product and we've discussed and we've tried to figure out ways why it's not good, we haven't been able to. So I'm going to go to a different screen fast, give you a second visual aid to help along the way.
Before we do that,
yeah,
Lee,
go
before
ahead.
we do that,
Yeah,
let's just take maybe a few questions.
sure.
Okay, just to break it up.
Yeah, if you got
So,
some.
so the first one was basically the cost of this insurance, which you'll go into, but it's less than doing a proper budget with a bad debt line item.
So listen, so here's the key. Okay, first of all, the insurance isn't available yet. I'm not saying it's not going to be available sometime this year, but it isn't available now. I can't discuss anything about insurance or policies or selling policies because nothing's happening like that right now. We don't have ability to do that right now. But we are discussing budget insurance. We're trying to introduce a concept because when you introduce a concept, this is brand new. There's been no substantial new insurance product in the community association industry for the last, I don't know, 20 years. The most substantial one was done, I think, by potentially a friend of mine who I used to work with is Mark Bogan, who's a former mayor of Broward County. and he created a product that basically will cover associations when their D&O policy doesn't cover them. So you have a claim against your association, you turn it over to D&O. D&O says, no, I'm not covering it. If you have Mark's policy, then his policy covers it and you don't have to pay out of pocket for your lawyers. So that he did, I guess, like 6, 7, 8, 9, 10 years ago. I'm not sure how long ago it was, but that was a new kind of policy. Okay. This thing that's coming out potentially soon is going to be different than anybody's ever seen. And when something is this new and can be this beneficial, we have to get a jump on education. And that's what I'm trying to do with you, Mark, and with your group. Okay. The best way to learn about budget insurance is to potentially, there were some articles that we wrote in the Florida Community Association Journal about budget insurance. There's also the website of the sponsor of this class, which is Budget Bliss Insurance, which is budgetbliss.com. You can go to that website and learn more about stuff. But the best thing to do now is to learn. And then once you learn and you're interested, then learn more. Because I'm going to tell you that when this product becomes available later in the year, you're going to probably want to learn about it and decide if you want it or you don't. Because we're entering a difficult time. Our market has been a rallying, equity positive market in Florida for now 15 years. Everybody's been waiting for the shoe to fall. It's been kept up abnormally by injections of capital from the federal government, things that happen in the state. But the bottom line is that a financial storm is coming, in my mind. There's other things that are attributing to it, like Fannie Mae and Freddie Mac, CSRS. Nobody in Florida has ever paid more maintenance to live in a condo than they're going to pay this year coming up. We can all agree to that, right? With the CSRS and the reserve requirements and everything else. Nobody's ever going to, in the history of condos, owners have never paid more than they will this year. And that's going to continue for some time. And the work that's being done and all the things that are happening, with structural issues,
Insurance.
And the biggest thing I told you before, those 100 stilts that are holding up the building, those 100 owners, right? Do we, as people, as lawyers, board members, accountants, bookkeepers, management companies, camps, do we believe that we have some kind of Svengali ability to have a crystal ball and determine how many of those 100 are not going to be able to make it in the next 12 months? We don't even know what's going to happen in the next 12 months. You want to roll the dice on that? So if you can actually obtain budget insurance for less than the amount of the bad debt line item and forego all those operational issues, have all the money you need, not be a board member involved in delinquencies of my neighbors, and pay less than that line item, and you would be a board and you'd say, I don't think I want to do that. I'm going to roll the dice, take my chances, right? And you say, that's fine. It's great. Take a chance. That's fine, right? You know what happens? Let's say the actual annual period goes and the delinquency, instead of being 5% like we thought, is 3%. Okay? That's great. That board, I guess they're heroes. They actually saved $20,000. I don't know if they saved $20,000. It was 3% instead of 5%. They could have gotten the policy for the same amount, right? So they could have actually bought the policy. So they didn't really save anything, right? But if they don't buy it, and the delinquency goes, instead of 5 is 7 or 8 or 12, and somebody looks back and says, hey, you guys could have bought this budget insurance stuff for less than the amount of what it was to even have our bad debt, what you expected to be in bad debt. And you didn't. And now I'm looking at paying an extra $1,200 on top of my $10,000 because you guys didn't buy something that you probably should have bought. It's math. This isn't my opinion, right? What I'm talking about budget insurance is that if the budget insurance premium is less than the real anticipated bad debt line item, it's a no-brainer. It's just a no-brainer. If anybody wants to argue with that, bring it on. I want to hear all the objections to that position because I can't think of one for the last 8 years, much less the last 5 minutes.
Lee, as an analogy, you take
Yeah.
out health insurance.
Yep.
If you're a 20-year-old, okay, the insurance is lower than if you're 60. Okay.
Yes.
But that 20-year-old can, God forbid, okay, with a low premium, all of a sudden he can get very sick.
Yes.
And now, where the insurance company is betting that, they're going to only pay out, let's say, maybe $1,000, they may have to pay out $200,000 for that illness. It's the same thing here that you're saying that, you know, with the budget insurance, it's going to be, again, a guesstimate, okay, of what your bad debt traditionally is. And if it gets worse, you're covered. It's a win-win.
Yeah, remember, Mark, it's not only like underwriting a claim for underwriting a policy for an association for this kind of policy requires substantial underwriting and intimate knowledge of the association and lots of factors. It's not just about bad debt. Delinquency is probably the most important factor. Like you said, the banks asked the first question, how many are delinquent? We do the same thing. Insurance company, a budget insurance company, we do the same thing. Delinquency is the most important factor. You know why? Because history repeats itself. And we know that associations that maintain a delinquency rate of 10% have been doing that for the last 10, 15, 20 years. They do it that way all the time. You know why? Because they can't get out of their own way, because nobody's willing to help them. Budget insurance will help them create a real budget, create real change in their community, have the money to pay for that change, and bring up their entire community and all their owners' values in the process. So it's really just it's exciting, is what it is. It's really exciting that this is going to be available. So it's available, and again, you can't just think about the money it saves the anticipated bad debt, because anticipated bad debt has more than just what the bad debt is. If I anticipate $50,000 and owner's not paying maintenance, right? Add to that attorney's fees that you have to pay the lawyer, right? Add to that wasted manager time. Now, the managers will still be dealing with delinquent accounts, but it's going to be a lot different because the manager is going to make a claim on behalf of the association. And then the money will be sent to the association and they'll have all their funds. And then the manager is just keeping the books as you are keeping the books. Same thing. You keep on doing the job the same exact way. Nothing changes for you guys. You keep on generating the income you're generating, working with the association in the same capacity, and doing the same thing you're doing right now. Nothing changes. But the board members, they're not involved anymore. They're just not. They don't have to be.
Well, it was interesting because we have another, question from Christina that says, if insurance provides a cushion, the board will be less motivated to collect from the delinquent accounts.
Guess what? The board doesn't have to about delinquent accounts because they're not collecting anymore.
Right,
The board is
exactly.
completely out. Once you buy budget insurance, the only thing you say to the insurance company is, we would like to keep using the lawyer we're using and the management company or the bookkeeper we're using, or we don't care about that, right? But as long as they want, the budget insurance company should want to keep the infrastructure existing that's functional and successful right now in place, unless it's not, right? So the budget insurance company will want to keep everything the way it is. All the budget insurance company will do is remove the board members from that horrible process and make sure that the budget is always has all the money they need to have what they said they need to do.
Right. So Steve has a question.
Yeah.
When a homeowner is late, does budget insurance pay for all the months that the homeowner is late, or just once, or a few months, or
Great question. So the budget insurance will pay on that account until the subrogation effort, which I can explain what subrogation is. Subrogation is what the lawyer does. Until the lawyer is finished trying to collect the money, the lawyer will either finish collecting the money one of two ways. Overwhelmingly, like right now, in the last many years, in a positive equity market, owners always pay their debts, almost always. Like if you have 100 owners that go into delinquent account collection, 99 of them or 100 of them will resolve their debt before losing their property. Okay. In a negative equity market where there's, properties where the condo is worth 500,000, but its mortgage is 800,000, it's upside down. In those kinds of markets, maybe 2, 3, 4, 5% at the very most of those accounts will turn into titles being transferred. So subrogation is the effort that once the insurance company pays the claim on behalf of the association through the policy, that claim is now turned over to a third party, right? Which is the law firm that's going to be doing the work for the association now, and they're going to collect on that money. But it's not going to be collecting on behalf of the association. It's still collecting on behalf of the association, but they're collecting now on behalf of the insurance company because the insurance company already gave the money to the association. You understand? The insurance company is giving the money to the association, so now whatever money the association is owed, now it's owed to the insurance company. And that insurance company will keep funding that claim for the remainder of the policy period, which is a 1-year policy period, no deductibles. And then if they renew the policy every year, which we think every association that buys a policy, we think is going to be a very high renewal rate because there's no reason you wouldn't want to renew it. As long as you renew the policy, hold on.
Yeah, and I guess really what Lee is trying to say, at this point in time, it's not really going ahead and costing the association any more money because they have to provide for a bad debt line item. And this is really just taking that place at a lesser amount. Gus actually had a question, Lee.
Yeah.
He says, great product, but how can we prevent someone from abusing it? I don't pay, and for the example is I don't pay my maintenance. Okay. What's the deterrent? Well, the deterrent is obviously is that the insurance company ultimately will be going against that person.
Right. Remember that we're trying to create again, as a board member, you see, this is the problem is that this is so new that I can't even get you to stop thinking about the way it is and not the way it could be. You keep on saying, like, how do we get people to pay? Well, you don't have to do that anymore. You don't have to think about worrying about a deterrence or if people are paying or not. It's irrelevant to you now. It's irrelevant to your board. It's irrelevant to your
association.
It's irrelevant, right? You're going to have all the money you're supposed to have in your accounts annually. When a claim for deficit is made, it's going to be funded within, I don't know, a couple of business days, the most. When it's not a complicated process. Somebody didn't pay us this much money. Our budget should be this amount. Because of this down payment is this amount. We're looking for you to pay the gap of this amount. That's it. You approve that and you pay it. And now your account has that money. And it pays that money every month or every quarter as long as it's due and the account isn't resolved with the homeowner. Okay. It keeps on paying that money. If the policy gets renewed next year, it keeps on paying if that account's still in delinquency. Right? Now, what happens if the association decides not to renew their budget insurance policy? Well, it would still collect the delinquent account and what's owed, but it wouldn't advance the money anymore. It would just stop advancing the money.
Lee, did you want to share? Because
Yeah.
we're running up against the hour. Okay.
I'm gonna do it fast so I can run up fast for you. But here's the first one. It's just an idea of, we did that one already. It's an idea of let's do association benefits. So again, insured versus uninsured, pays regular assessments when owners don't. Insured, yes, the deficit's paid for. Uninsured, it isn't. Insurance consistent operational cash flow, yes. Fully funds adopted annual budget, yes. Ends bad debt, yes. Ends financial liability collection attorneys' fees and costs, yes. Saves board members time and aggravation by removing them completely from the collection process, yes. Saves board member and management time and aggravation dealing with deficient budgets. Yes. Owners never pay for their neighbors' unpaid budgeted assessments or the amounts required to collect them. Yes. Ends budget shortfalls. Yes. Will carry A&M best rated insurance and be backed by an A&M best rated insurance carrier with an A rating. Hopefully, yes. Improves creditworthiness and expands borrowing options. We discussed that. In a big, giant way when you're taking out money. Increases association owner financing options. Yes. Okay. So that all is positive, right? Again, benefits other than just having a fully funded budget. Let's go to the next exhibit. The last exhibit is something that's called Everybody Wins. Okay. This product is an interesting product in that when I would tell people that if budget insurance became available and you were able to buy it, it should either be the first policy of insurance you should buy or the last policy of insurance you should buy. Because it does something that no other insurance policy does. If you buy a budget insurance policy, it will guarantee that you will have the money to meet all of your financial expenses, including all the payment of all the insurance policies, the other insurance policies you're going to buy. And no other insurance policy does that. You're basically guaranteeing that you will not be exposed to not having the money you need to meet your obligations. You won't have to borrow from funds you shouldn't be touching. You won't have to let your building fall into a dilapidated or lapsed condition because you just don't have the money to pay for those things. Really, this product, if purchased when available, I think will revolutionize the way that management companies and volunteer board members operate, the amount of time they devote to those things, and will capture time and money. And when you capture time and money, you create immense amounts of benefit that nobody can really even measure or manage. But we can go through a different class at a different time and explaining how all those different tangential items that are benefited by the budget insurance touch. And this is just a quick screen that basically shows you, that every stakeholder, when the association buys budget insurance, if it's available and when it's available, the association is better off. The volunteer board members are better off. The paying owners are better off because they're not responsible for their neighbors' debts or collect their neighbors' debts. The community association managers are better off because they have more time to do their job running the association, creating benefit than chasing people for money and dealing with delinquent accounts. Management companies love it. Guess what? Their bills, their management fees get paid also. Do you know why management companies get fired? Because the boards and the associations don't have enough money to pay them, right? But if you have everybody in the budget and you have a guarantee your budget, you have everything covered. Banks and mortgage lenders, they're going to love it, right? Because this almost guarantees that they have a signer, like a second signer for their obligations they're giving to these corporations, these not-for-profit corporations. Law firms handling delinquent accounts are going to love it too because it streamlines the entire process, makes it easy for them. Lawyers, contrary to what everybody thinks, I love my board members, but I don't love when my board members try to micromanage delinquent account collection because that's called selective enforcement. Go after this one. Don't go after this one. We like this person. We don't like this person. Do this or hold back. Don't give anybody over 6 months and then turn them all over in 30 days. All those things don't work right? So we understand how this is supposed to go. We understand how to treat the owners like respectfully and help them resolve their financial distress and situation with the association, get them back in good standing with the association. Service providers, every person you pay through your budget is going to be happy that they know you have budget insurance because they know that their services payment is protected. Neighboring associations, when your association looks better, neighboring associations are pulled up. Cities, county, and state, when your values go up for the association and individual units, tax-based payments go up. City, state, and county get more money, okay? Delinquent non-paying owners, even they benefit because we're going to make it a better system and ecosystem for them to go through and be treated as neighbors and friends and our people that we live next to and talk to and see and people that are part of our lives. And we don't want to take them and throw them away. We want to help them if we can. And as long as we can help them and not hurt us, then we should be doing that. And we can do that. And overall, it's widespread financial and operational strain right now because of this situation. And with budget insurance, there's broad financial and operational improvements, solutions for all stakeholders. So I hope, that really sums it up. It's a lot of time, I know, and it's a lot of talking, but I hope I gave you some stuff to chew on and think about.
Lee, also, the participants have to understand that they call their insurance broker right now. The insurance broker has no product like this at all.
No, there's no product existing like this yet.
This is brand new. This is unique, okay, which will be rolling out hopefully in the next few months.
That's right.
And this is really just a little taste and really an education for everybody because
Right.
also, even the property values go up because this is an analogy almost to like reserves. If a community has reserves, the value of the property is worth a lot more. When people
Yes,
realize that there's an insurance policy that's protecting them, that they're not going to have to go do a budget shortfall, SA, okay,
that's right.
it's worth a lot more than a lot of other communities that they walk into and they don't realize about bad debt.
Right. And we're looking at all those things, all the things that affect community associations that we've learned over 30 years and how those instances affect them is all part of our, what will be an underwriting model. And we do believe that this will become available this year, hopefully sooner than later. and that people are going to be able to actually buy it. Right now, like I said, if you want to start learning about it or even possibly get in line to be offered a policy when it does come out, you can go to the website www.budgetbliss.com. They are the sponsor of today's class. I don't have any, the information on the site will explain more about budget insurance right now, but it's super exciting, and I'm really thankful to be able to be here and teaching it on CARG. So I want to thank you again, Mark and CARG, and
Well, we're going to definitely
go.
invite you back, okay, to really, once it gets a little closer,
Sure.
to rolling out the product. Um, if any, we had so many questions. We had an overabundance of questions that we just cannot get to. If
Okay.
you go ahead and you either go to budgetbliss.com or CORG, CARG, for help.org, write your question in. We'll pass it on to Lee, and
Yes.
we can get that, we can talk about it a lot further and give you some more information on that.
Thanks, Mark.
Okay?
Yeah, it's very exciting. And again, um, you know, it's a great time to be involved in community associations. It's a difficult time in lots of ways, but it's exciting that something like this is coming out and potentially soon, and it's gonna make everybody's lives a little bit better, I think. And everybody's always up for that. So I'm very happy.
Terrific.
All right.
All right, Lee, thank you so much on
Thank you,
behalf of
Mark.
COG and all the participants. If everybody stays on, we still have Maori Elevator here. We have GRC Landscaping. We have Darren, who does the pest control, um, tree trimming consulting. We have Craig with professional builders and janitorial. That if you have any questions whatsoever, now is your time to ask, get some free advice and some education. So in the Q&A, if you have any questions, we can go ahead and open it up to the COG members. The COG members, if you can unmute yourself and put on your video, then we'll get started with that. Lee, again, a wealth of knowledge. And
Well,
and
I appreciate it. I really do. And I have a
well,
question. I have a first question.
listen, Lee, you've been around, you've seen all the bad stuff. You've seen all the problems with the collections and how detrimental it is to association. So your wealth of knowledge is really welcomed.
Thanks, Mark. If you stay around long enough, you learn some things. It's okay. But the excitement is that when you have something that you can make everybody's life better, it's exciting. So again, I have a question for Darren though, because I know Darren Frost. He's a friend of mine. I've done a lot of business with him as well. And you mentioned before about him doing pest control services, which I know is through Forever Gone. And I know that he also is offering himself up as a consultant because he's done a lot of landscaping, holds lots of licenses, and holds a lot of licenses, and is working with community associations. So I guess I just wanted to understand that idea about him consulting with associations to help them make good choices on landscaping, tree trimming, pest control services. What does that really involve, and what does that look like a little bit?
Yeah, I think Darren must have walked away quickly,
Gone,
but
he's gone.
but
Okay, no
he
worries.
he works hand in hand with Charles at GRC Landscaping, who's on.
Just
So
meeting Charles. That a little
that's
bit.
basically it. There is a question right now. Andy, if you can just unmute. There was a question as far as with Maori Elevator, how long have they been in business? And um, as far as when they talk about modernization, what does that actually mean?
We are actually celebrating our 50th year in business this year. The company was started in 1976. So we're celebrating that. It's a milestone, major milestone. Not a lot of companies that were locally started down here can say that. So we have been around for some time. Same owner, same person, still involved with the company every single day. Modernization, yes, modernization is when your existing elevators are worn out, obsolete, don't meet current code. You have to do a mechanical modernization on your elevators. The controllers, the traction machines, the pumping units, the fixtures, everything to meet up the current codes.
Great, thanks so much. Charles from GRC Landscaping, there's a question here. Is it too late to go ahead and start doing some tree trimming in anticipation of the hurricanes?
Not at all. It's the best time of the year to get prepared and get your trees trimmed away from the building. Uh, yes, now's the time you want to do it. Hurricane season is now.
Great. Alrighty. We have one more question for Valley Insurance. That's Tyler. Tyler, if you can unmute. How are you, Tyler, first of
I'm
all?
doing good. How you guys doing?
So the question over here, and I just lost my place, is we have an insurance broker right now. And what can we expect if we give you a call saying that we have an insurance broker that's currently active with us? And I think they're talking about maybe with, the broker of record letter. What I always say to my clients is that, it's healthy once in a while to go ahead and to check your insurance because sometimes some brokers get very complicit and they just look to just renew rather than go ahead and really delve into the current insurance policy and see where you can make improvements.
Yeah, and I would agree with that. And honestly, I compare it to what Charles does, right? There's probably a lot of other companies like GRC that have the same exact lawn equipment, but they do a better job, right? So it's all about, does your broker have expertise in the space? What are they using as leverage, right? A lot of times in this soft market, these property carriers have so much room. If this broker budgeted you for a 7% decrease and their property carrier hit it right away, they're probably not going to dig deeper and find you more savings because you guys are already happy you hit your budget, where there could be, instead of that 7%, there could be a 20% savings with better coverage. So I would say is we treat it like an interview process where I ask you a couple of questions and figure out if there's actually a need from us. And from there, we can decide if it makes sense to move forward with Valley or to stay with the current agent. So almost like an interview process just to figure out, are you getting the right services? Is your agent going to the right places?
Right. I mean, actually, Tyler, and you know which client I'm talking about. We just had Tyler go ahead and review one of my clients' insurance policies, and he literally saved them 15%. So again, I want to thank you on behalf of the client, and also you always make me look good when you save my clients money. There's a question here for Talbot Painting. Austin, can you just unmute? I think are you there, Austin? Okay, well,
Mark, yeah, it might just be his note taker. I don't think he's here.
oh, okay, good enough because I see this too. All right, so we'll skip that one.
I see Craig is here. There's a question for Craig in the
Yes.
Q&A, actually.
Yep. And Craig, what they're talking about, because I mentioned that you go ahead and do janitorial and light maintenance.
Correct.
The question is, why hire you versus just taking on a couple of janitors and put them on our payroll?
Sure. Being in business as long as we have, over 45 years, we've learned over time that when you make a hire as a private employer, there's a lot of things that come into consideration. If they no-show, it's a no-show. There's nobody there to cover, where, best case scenario, we'll be able to get somebody over there to handle the tasks during a day, not to mention the financial piece. The association will be responsible for FICA, workers' comp, liability insurance, et cetera, where we take on all those costs.
All righty. There's another follow-up question with Dixon. If the janitorial service that's here, which is Professional Builders, do you have experience with maintenance of public common elements, or are you more of just for office environment?
No, the bulk of our business actually is condo and homeowners associations. The majority of it is common area maintenance, whether it's the catwalks, the pools, the common grounds, clubhouse, et cetera. Those are our main tasks that we provide.
All righty. Darren, one last question, if you can unmute. I know you're in the car.
Sure, yeah.
There, obviously, we said that, you do consulting. How is your fee structured, with, if they take you on?
So we just work directly with the HOA and we assure that everything runs smoothly. And the company that gets hired is the one that pays us. So it's not a separate fee.
Okay, great. All right.
So
That's
it's a
always,
competitive quote. And back to what Lee said as far as the budget program, I think it's a great for landscaping companies. Probably the biggest line item other than insurance is landscaping. So it would be nice to know as a recipient of, the someone with bad debt that they're going to be covered. Getting the recurring lawn service payments and tree trimming and all that. I think it's a great product.
right. All right, thanks. Charles, you are unmuted. There's a question from Dixon. Charles, what's the strongest tree to have with regards to standing up to higher winds?
It would
And
probably
and
be,
he supplemented it with lining a perimeter wall, for example. Like if you're along a road, you want to line up a perimeter wall. What's the best type of tree to have? Is I guess what he's asking.
um, my answer to that would be some species of hardwood, whether it be a laurel oak or a live oak. That would generally be the most stable and the strongest type of hardwood available.
Okay, great. What about mango trees, Charles?
Even the
I
mango.
say that because Charles goes ahead and supplies me with mangoes. He has mango trees in his backyard, and they are basically the sweetest, best mangoes around. So I guess if Charles gets any new clients, you'll give at least one or two mangoes to them, right?
Absolutely.
Okay, good enough.
Or
I
as long
see.
as those mangoes are worth under $25, according to state legislature.
Right. Thank you for that, Jeff.
Yes, yes.
Keeping us on the straight and narrow. All righty. Oh, and there is a question actually for myself because I do condominium monthly accounting. Um, they say we're always running late on doing our budget. When should we start? So what happens is usually towards the end of July and into August, at least for ourselves, we go ahead and we prepare budget worksheets. We send that to the board. We ask them to fill out as much as possible. And then we sit down with them and go over line item by line item. So the answer to the question is when should you start? The earlier the better, because it is a process. You go ahead and you do the budget worksheets, you revise them, then you go ahead and bring it up to the board. Then the board discusses it, and each thing takes time. So ideally you want to go ahead and pass a budget before probably in the October, November, setting, definitely before Thanksgiving, if possible, because then after that, then you have to either start sending out new ACH forms or um, coupons. And to set up the budget, you have to have a 2 week notice. So the earlier, the better on that. And again, we're all here. Even if you have a landscaper, you have a manager, you have an elevator company, you have an insurance company, you have a monthly accountant. If you go ahead and give us a call, we're more than happy just to talk to you, give you some no obligation, free advice to go ahead and to answer any of the questions. And again, you can reach us through COG, CARG, the number 4, help, HELP.org. And I think that's basically all the time that we have. And we've answered most of the questions. Some were redundant, so I didn't ask them again. And again, if you have any particular topics that you would like to go ahead and have an educational webinar on, just give us a contact, give us a call, and we'll take care of it for you.